Hi there, a very good morning and good afternoon to all of you, and welcome to my channel Simply Stocks. And today I'm going to talk about a very interesting small cap company that has been performing well for the last few quarters and have been doing well and in a very niche space that they are working in. And this space and this industry has been doing well over the last, you can say, 2 3 years, and over the last 3 quarters 4 quarters there have been a government push in this industry as well. So we're going to discuss about that, so let's get started. So first of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Whatever discussion I do of any stock, that is purely for educational purposes, and this channel itself is purely for making you all understand about the market and stocks, as I have been a retail investor into the market for the last 12 13 years. And there is no cogence on me as to whatever decision you take with respect to buying into any company. So I am not an NSE and BSc member. I am not a certified NSE and BSc member or portfolio advisor. So kindly take that on note. Whatever I discuss is purely for the fact that you understand about the business, and then you can take your own decision on a particular stock. So before I talk about, say, this company, a small request that kindly support me on Patreon. Once you do that, help me grow channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also you can pay $100 upfront. You get 1 year access by paying for 10 months. For not getting, if you are not able to get through Patreon, then kindly do subscribe to the YouTube network, or you can be a member on WhatsApp as well on an annual membership. Okay. So now let's discuss about this company. So let me take you to the screener website. So the company in question in here is Rolex Rings, a very interesting company from the forging space, a company which has a market cap of 5,000 crores, and it is currently trading at a PE of 28, so not extremely expensive, with a good ROE of around 28 29% and an ROCE of 31%. The company has been producing very decent numbers. It's currently trading at near to its all-time high. It's around 1950, just a little bit down from there, and is consolidating. So just a little bit about the company, and then we'll discuss about the numbers and technicals. So basically, it is a leading manufacturer of forged and machined components in India, and is one of the top five forging companies here, with a global supplier of hot rolled forged machine bearing rings and automotive components for various segments of vehicles, industrial machines, etc., wind turbines and railways. So in a number of industry they are in, and as I mentioned that the government pushes into railways and turbines and wind energy and renewable energy, etc. So you can play it through the route of ancillaries as well, something like Rolex rings. So one of the largest, you can say, forging companies in the world, and its revenue mix is it derives nearly 54% of its revenue from bearing rings, and 38% comes from automotive components. So its major portion comes from bearings, and it has wide range of product offering at the moment, with automobile parts, hot forged and machine alloy steel bearing rings weighing from zero point zero 0.01 kg all the way to 163 kg. So a gamut of products that the company currently has under its, you can say, ambit. And if you look at international presence, the company currently exports its products, bearing rings and automotive components, to 17 different countries globally, including France, Italy, Germany, Thailand, Czech Republic, US, and others. And exports contributes around 46% of the total revenue. So this is a company in which you have 54% of the revenue coming from India, and that's why the numbers are fine and not that bad as compared to many IT companies, or some of the pharma companies that are having most of their business in Europe and US. So once things normalize even further globally, I think the numbers could become even better in here. So, so this is purely about the company. One of the negatives for the company is that pledging, apart from the default of payment that they did in 2009. So this was something like around 13, 14 years ago. They did a major capex of 350 crores in 2009, from which they expected a turnover of 600 crores. But since the automotive industry went into a complete slumber and into a recession, due to which they defaulted of payment of certain loan facilities and restructures Trump's debt amounting to around 487 crores. They have pledging of shares also in FY18 and 19. They pledged some shares during that period, and they have also delayed the repayment of loans to the banks in the FY18 and 19 calendar year also. So these are some of the negatives that you have to ride with this sort of a company, say any small cap company. So kindly take these points on note. And so overall the company has been performing well, exporting well, and the numbers are pretty decent. So if you look at the numbers per se, they did around 306 crores in December of 22, 308 crores or so, versus doing 242 crores. So this was a clear jump of around 25% or so. Margins remained constant at 22%. And if you look at profits, from 52 crores, profits jumped to 68 crores, so a 30% jump in you can say operating profit. And eventually you can say the final profit number was also pretty strong at 53 crores versus 30 crores. So overall numbers have been strong, but you have to take into effect the caveat of a default of payments 13, 14 years ago, which is not happening at the moment because the industry has turned around. So probably you can give it a pass at the moment, but the fact that they have some pledging, and that is some sort of you can say a negative for the company. But overall results front, they are doing fine. In terms of, you can say, borrowings also, from around 600 crores in FY16, the borrowings have reduced to around 170 crores. And you have cash on or reserves that have increased tremendously from 120 crores in FY18 to around 620 crores. So on that front also the company is doing pretty well. In terms of ratio, debtor days that have gone up or have remained stable at 83 days for the moment. Inventory days are going up and down, currently around 200, 206 days is decent enough. In terms of shareholding pattern, promoters hold around 58% stake, FIIs currently hold around 4%, and DIIs hold a very decent chunk of around 32%. DIIs have increased stake in the last, you can say, 6 months or so. From June 22, they had you can say stake of around 22%, and in December they had stake of around 32%. So this is also pretty good for everyone, that DIIs, FIIs are invested big time into the stock, and promoter hold more than 50% stake. So public shareholding is only around 6.5% at the moment. So overall, what I feel is that Rolex Rings as a business looks decent because of the turning around of the cycle. It's not a perennial stock that you buy and hold for 5, 8, 10 years. The cycle is doing well. You can buy the stock and probably it could double over the next couple of years if things starts performing for the market as well. I think the stock could easily double, currently trading at 27, 28 times, and trading at 4 times, 4.5 times sales. But sales itself will grow more. So if you look at it, in the March quarter they did 290 crores last time around. I will not be surprised if they do 360, 370 crores this time around in March, which entails that the FY23 numbers, in terms of FY23, they could come out with somewhere around, if I calculate these fine, then somewhere around 1250 crores of sales, and the market cap of the company is around 5000, 5300 crores. So taking that into consideration, we are looking at a situation where the stock is trading at 4.2 times sales, and 1 year forward on this 1250, if I say they grow by around 20% even, then we are looking at somewhere around, so 1250 into say a 22% growth is quite feasible in here. So we are looking at a situation where 1500 crores of sales in FY24 is possible, and based on their margins and everything, if I look at how their performance have been on 308 310 crores of sales, they do around 53 crores, so around 6%, if I'm not wrong, it was 17% of the total. So if they do around 1500 1520 crores of sales, then we are looking at a situation where they'll do 262 crores of profit, and taking that into consideration, easily they are going to come up with somewhere around 95 rupees of EPS in FY24. So I believe an EPS of 95 is quite possible for FY24 for the company. Currently it is trading at 28 times. If it trades at around 30 times even at 95, we are looking at a decent upside for the company of around 2800 on the stock. So in a year and a half times, we see a 40 to 50% upside, but the PE itself could expand going forward. It's currently it is trading at 27 28 times. Its long term average PE of 5 year has been around 30 times. So that's why I'm saying that it will trade at 30 times. I think 2850 is something from a 1 year perspective is what I'm looking at for the stock. And if I'm looking at 2850, which is a 900 rupee upside from here, keep at least a 300 rupee downside protection, so a stop loss. So basically 1650 is your stop loss, 2850 is your target. Time frame is around 12 to 15 months. I think once things start moving, the stock could perform extremely well. So from here on in, this is a good 900 rupee upside that I'm talking about from the current level of 1950. A disclaimer, I am not invested in the stock. I don't have any positions. Normally, whatever stocks I talk about, very few, virtually none is in my portfolio. So 47% upside possible in the next 15-18 months, and keeping a stop loss of around 200 300 rupees from here on in is quite feasible. So basically, Rolex Rings is a decent company to invest with a stop loss in mind. Kindly take that on note, and take position of only around 3 to 5% of your total holding, and then increase your holding as the stock moves up. If the results are much better, then keep on holding the stock and ride, and probably take your stop losses higher, and so that you can ride the move, because once this industry really picks up, these kind of stocks could even double triple in no time. So basically all across the board, in terms of numbers, the stock looks good. So this was my video on Rolex rings. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.